What is up, you guys? It's your boy, the Finance Bro, and thanks so much for joining me. In this video, we will be taking a look at Constellation Software. We will look at their fundamentals, their technicals, and the underlying business to see if there is value here for new money to flow into the name. Now, for those of you who don't know who Constellation Software is, they are a Toronto-based conglomerate that acquires, manages, and grows businesses that provide mission-critical enterprise resource planning software. They target small, medium enterprises, meaning companies that employ no more than 1,000 employees within attractive niche vertical markets. Their growth is primarily driven via funding new initiatives and acquisitions and using management's disciplined return on investment capital approach. They are a global company with more than $11 billion of annual revenue in 2025. They employ up to 60,000 people and have been in business since August of 1995. Now, before I continue, I do just want to mention that this video is not investment or financial advice and is solely for entertainment purposes. All values that you will see within this video are as of market close on March 31st, 2026. What we have here in front of us is Constellation Software's 12-month stock chart. You can see shares have come down significantly, losing almost half of their value within the past 12 months. They are trading significantly below both their 200-day moving average, that is that orange line you see there, and the 50-day moving average, which is the green line. So just on the share chart alone may be an opportunity for a good entry, even if there's a short-term bounce. Here on this chart is a few key items. And I want to start with the bottom left here. There are 6 analysts that cover Constellation Software, and on average, they have a price target of $4,268.13. From where shares have traded on March 31st market close, that implies an almost 75% return if shares hit their price target. Now, that is a great return for any company size, but for a company like Constellation Software, that is phenomenal. You can see here in the middle of the chart, the profitability doesn't look too good. Now, Constellation Software did have some accounting practices. They did amortize a few of their intangibles, and they had some one-time write-offs. So their accounting practices did shrink these numbers and does not actually reflect the true profitability of Constellation Software. But if we take a look here, you will see gross margins of 25%, which is showing lower than the industry and benchmark averages of 34 and 27.7% respectively. And you can see that big drop off from gross margin to net margin. Net margin for Constellation Software, based on their last earnings report, was 4.2%. Again, this is from accounting practices and one-time costs that analysts and the company do not foresee throughout 2026 and 2027. You can also see how those accounting practices affected the PE ratios. You can see the trailing PE of 72.3, which is an obvious indication that shares are overvalued. But when you look at the forward PE, you will see that at 14.4. That is because price and the earnings affect the PE ratio. When price comes down significantly and earnings forecasts are positive in the quarters ahead, you will see discrepancies in forward and trailing PEs. You can see though, at the bottom, the underlying business is growing very well. The sales growth above the industry and the benchmark averages of 17.7% over the past year. Very good, which doesn't really reflect in their profitability and in their margins. But you can see that their earnings per share now, Constellation Software has grown their earnings per share on an annualized basis of 20% over the past 10 years. Now, you can see forecasted EPS here in that bottom left graph of almost 10 to 20% per year as well. Company here, you can see the growth, even though shares have come down in 23, 24, and 25, the company and its earnings per share have grown and are forecasted to grow in 26 and 27 as well. So shares are trading cheaply, yet the business is doing well fundamentally. That is what we want to see and want to exploit these price discrepancies. Now, you will see at the bottom right, there is a beautiful photo of Mark Leonard. He is the founder and former president and CEO of Constellation Software. He will not stand for re-election to Constellation's board. He announced that on Friday, March 27, 2026. This is not any different news. He did step down as a president and CEO role in September 2025, and he already disclosed this many quarters ago. This will take into effect on May 15th, 2026, but he will still serve as an advisor to the board. Mind you, the incoming president is not actually incoming to the role, I should say. He has been with Mark Leonard since its inception. So being there, being part of the management decisions. Now remember, these companies are not made, do not have decisions that are made by a sole person, but by a management team. So the school of thought and thought process that Mark Leonard has will continue to transpire in management and in their board as well. The company's ability to compound capital through acquisitions has been very good, and it should have a positive outlook in the years ahead as Constellation does deploy capital at high hurdle rates. And along with their scalable nature of their decentralized business model, they should be able to see even more growth than they've had in years past. They have multiple companies in various niche markets and sometimes multiple companies within that same market. If they can figure out some synergies and efficiencies in these businesses, this will be very beneficial to the company's bottom line, which should trickle into shareholder returns as well. Now, there's solid underlying fundamentals with Constellation Software. As you can see there, sales are growing and not showing any signs of slowing down or actually forecast to pick up in the quarters ahead. Now, Constellation focuses on mission critical vertical market software, which does insulate them from that AI threat and offers an attractive market structure. Now, Constellation benefits from stable organic growth, high margin, and solid free cash flow conversion after the acquisition of these businesses. To make things even better, management and the company has a return on investment capital performance incentive to ensure that managers perform over time and increase performance over time. That is beautiful to have both shareholders and management ideas and ideologies aligned to improve the wealth and the underlying growth of Constellation Software. And you can see that as margins have expanded in the past 10 years by almost 300 basis points. That is very good for a company that is continuing to acquire smaller companies and increasing those margins of the companies and their profitability. They have a good track record of doing this for over 30 plus years in multiple different countries. Now, you can see those valuation metrics that we showed before. They're trading at a near 10-year low in their valuation range. So they can be a good entry point depending on how you look at this. Again, the forward PE is showing a value name, and analysts are showing growth in the underlying fundamentals, and they have reported that in their most recent Q4 2025 earnings reports. And like we saw on those graphs, they have grown earnings per share at an annualized rate of 20% over the past decade. Bears might say Constellation has gone too big, kind of like the Berkshire Hathaway effect. There's smaller markets now that they can actually go in and acquire businesses. They do have that small and medium sized enterprises. Now they may have to, with their large capital pool, go into larger companies, which offers more risk. And then there's the monster in the closet of artificial intelligence. They are insulated. Companies use their business for over 30 years, if not longer, in some of these companies that got acquired. So AI isn't really a big threat. Please do drop a like and subscribe, And it's your boy, the Finance Bro, signing out.